In this video, I'm going to show you step by step how to complete a profit and loss template, and in this way be able to build a very simple financial prediction model for your business plan. So the profit and loss template that I will be using is linked in the description box below, and I'm just going to show you very easy how to go to it. So you go to the Kickstart page and you go to the free profit and loss template. When you click on this, it will automatically open the template for you. And then if you click on the top right, use template, it will open up a copy for you that you could immediately start editing. In order to explain to you simply and step by step how to complete this profit and loss template, what I will do is I'll basically sort of create a dummy company selling t-shirts online, just because it's a very sort of simple example to explain to you what sort of costs I might be putting in to different places. So I'm looking at my profit and loss report, and I will be starting with the income category. So looking at the income category, I have got a line for my sales. The easiest way for me to calculate my sales will be by taking the amount of t-shirts I'm predicting to sell and do that times the price of my t-shirts. So say that I predict in the first month I will be selling, say, one t-shirt a day online, and I am charging £30 for my t-shirts. So that would mean that I would have 30 times 30, which would give me a revenue of £900. You've got a second line there that says income. So basically, say that you were branching out and you were selling other items. You can basically record as many income streams as you want. I'm going to keep it quite simple and keep it to sort of one type of t-shirt that I am selling. However, I will be charging my clients for delivery. And so this will be a delivery charge. So this will be something that I will be getting money from my clients for. So say that I charged £2.50 for delivery, and I do that times the amount of t-shirts that I charge. You can now see that I have got a total revenue of £975. Moving on to my cost of sales, this is basically all my costs that are directly related to my sales. So here I'm predicting to sell 30 t-shirts, and say that I predict that I will be buying them for £10 myself. So I have got a direct cost of sales of £300, and then I have to pay the post office for the deliveries that I'm doing. I have to pay £2 per delivery, so I do 2 times, and then the delivery cost times the amount of t-shirts, so that will be my total delivery cost. Now you can see that the template automatically gives me my gross profit here. Now it's very important to mention that your gross profit is not necessarily the profit that you will be having as a business, because you have to look at your company-wide expenses. So very important for your gross profit. It is an important number because it will give you an indication of how much money is left for you to run the other elements of your company. So you want that number to be nice and high, but you need to keep into account it won't be the money that you will be that will be your profit at the end of the month. So looking at the list of expenses, what I've done here in this template is I've listed a number of very common expenses. However, expenses are very kind of company specific. And so it's very important that you try to be as comprehensive as possible and try to find out all the costs that will be involved in you running your business. And so there is, space for more custom categories, but by all means add some rows to this template to make sure that you record all your all the necessary expenses. So starting at the top, say that, your business is mainly online, so you will be marketing online, and say that you say, okay, the first month I want to, properly advertise on Facebook, and I'll be paying them for advertising. So I'm expecting to spend £50 in ads. Then I want to pay myself because I'm going to be spending lots of time getting my business started up. So I do feel like I need to be able to pay myself for my time. So for example, I am wanting to pay myself £400. It's quite small in the beginning, but obviously I'm not selling a huge amount of t-shirts just yet. So I won't spend too much time on sending out packages. In terms of rent, say that you decide to run your business from home. So you basically sort of sublet a small room for £100 per month, and utilities, you will contribute £25 to electricity, lights, and that sort of thing. In terms of office supplies, you know that you'll be needing little tags and stuff like that. So basically you will probably pay about £10 in those, and you also want to pay for your internet connection to be able to receive the orders from your clients, to be online, obviously. Now you can see that there's travel in here. I don't necessarily think I'm going to be traveling within the first month for my business, so this can remain a 0. And then moving on to insurance, also there won't be any specific insurances. In terms of subscriptions, I think I will need to subscribe to Canva to make some cool graphics for the t-shirts that I'm selling. So per month, I think this is going to cost me £10. Other computer and software costs I won't have just yet. So if we fill out all these categories, we can basically see we will have a total cost of £645 this month. So total expenses, sorry, and it will leave us with a net profit of 30. Once you've recorded all the expenses for your company for the first month, there you will see that there's 3 categories left at the bottom called interest, depreciation, and tax. Now, these are categories that I personally wouldn't advise to look at on a monthly basis, but they do really matter on a yearly basis. So once we've kind of filled out the prediction model for the entire year, I will briefly be discussing them and how they will affect your profit and loss prediction. Moving on to the rest of the year, once you've sort of done the first year, it's actually pretty simple to then extrapolate it towards the next year. And sometimes you can literally just continue with the same level. Sometimes you're going to look at different percentages or different things that are going to come up. So if we look at our sales, for example, in my case, I will predict that my sales will actually grow by 10% every single month. And so basically I'm going to be putting in a formula saying that 1.10 times my original sales level will give me my February sales level. And then if we drag this formula through, it will basically give us the result for the year. Now, in terms of my delivery charge, I think that this is going to go a parallel route to my general sales. So I'm going to be growing at 1.10% as well every single month. This gives us sort of a view of if you grow by 10%, by the end of the year, by December, you will more than doubled our sales. So we're just going to be going on that assumption. Now, if we look at our cost of sales, we basically know that this will be closely linked to our actual sales. So for simplicity of this model, I am just going to use the same percentage growth that we are seeing in our sales and apply it to our cost of sales and then drag it through to the other months. Same with our delivery charge. Now, I just want to mention very briefly here that this might not always be the case, so don't be too quick to make that assumption. Sometimes, for example, you can have an agreement with your supplier that if you have a certain level of purchases that you will be getting a discount, for example, which might affect your gross profit margins and in effect your profit and loss. So always be sure to try to get as close to the right predicted number. Moving on to our expenses. Here, we're not going to be using the same percentages because these costs will vary a little bit. So in terms of marketing and advertising, it will be a conscious choice for me to decide how much I'm going to be spending in marketing and advertising. Say that I said, well, in January, I did a bit of a bigger push. I don't want to be spending £50 per month, but I want to be spending more like £20 per month and then grow 10% month on month. I can use the same sort of formula as I did before. So I'm going to be using this value and then timesing it by 1.10 and dragging it through the entire year. In terms of payroll, I can, for example, link the pay that I will have to my performance of my company. So I can say if we're growing 10%, I would like my income to grow with 10% as well every month. So again, I will just drag that through. And then looking at our rent, we basically predict that this won't increase that much. We will just follow the same, we'll use the same premises, so the amount will stay the same. And then in terms of utilities, I predict the same amount of electricity. So I'm going to be just dragging that through. For my office supplies, I also think I'm not going to be needing a lot more stationery, so I'm just going to give myself a healthy £10 a month. My internet expense will stay the same. Again, I can just drag through the 50 months. In terms of travel expense here, so it's very important to know that we're talking about travel expense and not necessarily a direct cost. So if I have to go see a client or deliver something to a client, it will actually appear in my cost of sales. But if I have to travel for general reasons in the company, it will actually be an expense. So say for me and my t-shirt business, I know there's going to be an important fashion show and I want to drive there, I want to stay overnight, and probably I'll need to have a meal out there as well. So I know this is happening in the middle of the year, so I will be budgeting £500 for that trip for me to go to this place. Insurances will stay the same at 0, and subscriptions, I think my Canva will continue to cost me £10 a month. I don't have any sort of smaller software or computer expenses, so they remain at 0. And for the simplicity of this example, I don't have any custom categories of any particular expenses. Now, coming back to this interest, depreciation, and tax category. So for my interest expense, this is an expense that I will have if I have any sort of debt on my company. So this can be credit card debt, maybe I have a line of credit, maybe I have a loan that I am paying off. So the actual repayments of the credit card or the repayments of the loan, they won't actually appear in my profit and loss statement as they are a capital expense. However, the cost to my company to have this money available, represented by the interest, will be something that I have to put on my profit and loss statement. So again, this requires a little bit of pre-calculation. This will be information that you will be able to find either on a bank statement or on your loan agreement. So you will be able to calculate that, and then you'll basically enter that directly into the financial model. In terms of depreciation basically happens when I am buying something for my company that is a large amount, and it also is something that will benefit my company for many years. Easy examples would be if I buy a car on my company, if I buy a machine on my company, an expensive camera, a computer, and basically rather than putting the entire cost of the car or of the computer through my profit and loss, which will make it look like I'm making a big loss, I will actually use what we call depreciation. So I will use the loss of value that asset has over a particular year as the actual cost to my company. So say that I buy, in my example, I've bought £1,000 laptop to start. I'm predicting this is going to last me 2 years. So basically that £1,000 laptop is going to cost my company £500 per year. So I will put £500 in depreciation in this total column. And then in terms of my last item, which is tax. Now, important disclaimer, normally tax doesn't necessarily immediately appear on the profit and loss, but I did find it important to put it in this statement so that we can use that information. Oftentimes, business owners think that the profit will be the thing that they will actually be able to take out of their company, but that's not necessarily true because you'll have to pay tax on those profits, but those taxes will only be calculated and paid once a year. So some business owners, they have a great first year, they're actually booking some profits, but they're taking it out of the company, and then later when the tax bill comes, it throws them for a problem because, you know, they can't necessarily pay their tax bill because they have already taken the money out of the company. So actually keeping an eye on your tax and actually saving for your tax can be a lifesaver as an entrepreneur when you are running your business. Now, tax levels are different in every single country, and they are different as to what type of company that you are running. So in the UK, you've got you've got kind of two main types. You've got your sole traders versus your limited companies. Your sole traders, your income will all be taxed on a sort of a tiered basis, but if you run a limited company, you'll have a fixed rate tax on your profit. It differs every year and it differs from country to country, so I've decided to just go with a 20% tax level to keep it simple, and we're going to be using this number here, which is our total net profit pre-tax. So this then will give us the tax that we expect to be paying on our profit for that year. So now that we fill this all out in our summary box down below, we can see what the result will be for our company's first year of running. We've got a healthy £20,850 in sales. After subtracting our cost of sales, we get our gross profit, which is 14,434. So this is the money that's left over to pay to ourselves and to pay to all our expenses of our company. After all the expenses, which, important to note, paying yourself on the payroll is part of the expenses here, we get a total net profit of £2,620. And then once we've saved up for the tax that we'll undoubtedly have to pay, we get a net profit after tax of 2,096. So on top of the maybe wage you've given yourself by being on the payroll, you'll still have £2,096 after tax left within your company, which then obviously you can pay to yourself. So I hope this was helpful. I hope this simple example gave you an idea on how to get started to fill out this profit and loss template. If you've got any questions, please pop them in the comments so I can respond to them. And if you found this video helpful, please give it a like and subscribe to my channel for more interesting business finance content to come.